Değerli konuklarımız, Türkiye Yatırımcı İlişkileri Derneği TÜYİD tarafından düzenlenen zirvemizle, ikinci panelimizle devam edeceğiz. Arkadaşlarım da sahne için hazırlıklarını devam ettiriyorlar. Bu panelimizde Uluslararası Bono piyasalarında Türk ihraçlarına olan ilgiyi konuşacak çok kıymetli konuşmacılarımız. İlk olarak panelimizin moderatörünü davet edeceğim ve sonrasında 4 konuşmacımızla yaklaşık 45 dakika içerisinde bu değerli panelde görüşlerini aktaracaklar bizlere. Moderatörümüz efendim Citigroup Türkiye'den sorumlu Borçlanma Araçları Piyasaları Direktörü Sayın Tommaso Ponselli olacaklar. Kendilerini alkışlarla sahneye davet etmek istiyorum. I would like to invite Mr. Ponselli to the stage for the moderation of this panel. Welcome, sir. Ve değerli panelistlerimiz, Allianz Bernstein Kıdemli Başkan Yardımcısı Sayın Okan Akın alkışlarla geliyorlar. Hoş geldiniz. Merhaba Okan Bey. Anadolu Efes Mali İşler Direktörü Sayın Orhun Köstem yine bu panelde bizlerle birlikte olacaklar ve Sayın Köstem deneyimlerini paylaşacaklar. Hoş geldiniz efendim. Buyurunuz. Garanti BBVA Yatırım Bankacılığı ve Finansman Direktörü Sayın Emre Hatem geliyor alkışlarınızla. Efendim hoş geldiniz. Merhaba, buyurunuz. Ve son olarak Şişecam CFO'su Sayın Görkem Elverici huzurlarınıza geliyorlar. Hoş geldiniz Görkem Bey. Merhabalar, buyurunuz. Ve ben sözü şimdi bu paneli yönetmek üzere Sayın Ponselli'ye bırakacağım sözü. The stage is yours, Mr. Ponselli. Efendim önce evet, panele başlamadan önce fotoğrafımızı alalım sonrasında.
Okay. Video testing. Thank you very much to TÜYİD for organizing this, which I think is a first in terms of the debt focus in this conference. We're delighted to be here. I apologize for the English. After 10 years covering Turkey, I'm still stuck at 10 words. So at this rate, in maybe 100 years, we'll get to a sentence. I'm honored to be joined on this panel by 4 distinguished guests. I'll start with Okan here on my left from AllianceBernstein. AllianceBernstein, for those who don't know, is a $600 billion asset manager and one of the largest global bond funds for us, and a very, very important Turkish Eurobond investor as well. Okan has a history on the sell side as well, in his past days, both at JP Morgan and RBS. Orhun Bey, I've the pleasure to have worked with for 10 years, both in his prior role at CCI, when he then moved on to become the regional director for Middle East and Pakistan, and nowadays, since January, as CFO of FS. Emre Bey from Garanti Bank leads the sustainability team at Garanti. And we are honored to have him talk to us a little bit more about the ESG topics that will be very topical throughout today. And Görkem Bey from Şişecam has been the CFO at Şişecam since 2014 and has had several banking roles before that with İşbank and HSBC. They would all do a much better job at introducing themselves, but in the interest of time, we've kept it to relatively brief. So I think the agenda today was really to touch on the rationale for bond and investors' views of Turkish corporates. That's what we were asked to talk about. Sustainable finance in Turkey and what the country is doing. And staying on investors' radar from an IR perspective, and so how can we add value from an IR point of view. With that, perhaps I'll start with Görkem Bey, and I'll ask you, this year you issued a very successful Eurobond offering to refinance a bond that was originally issued back in 2013. Not only did you do a bond, but you did a tender offer, and then you did a tap about a week later. I think one of the most interesting deals done in the Eurobond markets from Turkey this year. Personally, my favorite. With no bias towards others. Görkem Bey, why did you do a Eurobond, and what was the draw versus convertible?
My sound is okay. So I just tried to move to the far corner, but in the end you started with me. Thanks for that. So first I'd like to start by thanking TÜYİD and the organization committee for this wonderful event, and I'm happy to be a part of this panel because it's a little bit interesting for me. So there's one of my investors, one of my customers, and two differentiated partners for the financing and investment banking solutions, I should say. So to start with, we haven't decided to take the bond instead of any banking loans or so. So it was not instead, in fact it is together with, because it was part of the long-term financing strategy that Şecam has put in place for the last 7-8 years, I should say. Starting with 2013, we have decided to be more active in the capital market space, not only for the equity investors, but also on the fixed income part. So we issued the first bond back in 2013, and we have a long-term strategy of having a dedicated portion of our financing coming from the capital markets, which on the long term shouldn't be less than 1/3 of our overall financing portfolio. So for the long-term business strategies we have, and to match the tenures, in fact, that the business is requiring, because in the end the glass business and the chemicals business are very capital consuming business that is requiring a huge capital base, and the investments you make are most of the time creating returns starting from 5 years going up to 8 years. So the first reasoning, in fact, is the financing strategy. The second part, I should say, is aligning the business strategy together with the financing. And the third part I can mention was, in fact, the request and the appetite coming from our existing bond investors. And we were only in the market starting from 2013, but especially in the IR space, we have tried to be as much as possible active and just doing NDRs and trying to take part in all the conferences globally. So we have tried to tell our story and carve out our strategy and clarify it in a better way, so that the equity investors and the fixed income investors are able to see the picture clearly. So aligned with our long-term strategy of having the fixed income investors more on board in our overall portfolio, that's why we came to the market. And we have been very proud to, I believe, to set one of the benchmark deals to be able to do as a corporate, the tap and the buyback at the same time. So it was a challenging time, as you perfectly know. So we were together, and we believe that for Şecam's long-term financing strategy, the fixed income will play a larger role with all the advantages that it is putting on the table, and especially considering that still in the local market we are not able to have long-term financing. So even for companies like ourselves, the longest tenures are still going at most up to 3 years. For most of the industrial companies like ourselves that are doing business that needs a long-term return period, I believe the capital markets will play not only in the Eurobond sense, but also TL-linked instruments will be able to generate more and more attention in the coming future.
Thank you, Görkem. I think a question to you, Orhun, on given your role as a CFO in 2 different Turkish blue chips, and I guess over a decade of experience of dealing with rating agencies, equity investors, and debt investors. I think the question from my standpoint would be, what is the synergy, and what's the difference, and what's the synergy also from an IR perspective in dealing with these 3 different constituencies, and how do you see the role of the CFO and the IR team in that?
Of course. First of all, Tommaso, thank you for joining us today, given that you had a baby boy 10 days ago, and congratulations.
Thank you.
Now, obviously, answering this question in front of these distinguished guests, I'm not sure I can add anything new, but let me try to share my perspective. normally I would have thought the investors would love a good company, and the definition of the good company could be one where they would know about the strategy or where the company is going to. A good management in place who can not only formulate the strategy but be able to execute that. A good financial health, corporate governance in place, so there is obviously a lot of predictability in the process, and fortunately, and I'm happy that is part of the discussion today, the sustainability or the social aspect of the company going forward, and Okan can share his view as well. Now, in that, but definitely if you take a look from the debt or the equity investor's point of view, the potentially a perception of those can be a little bit different, given the fact that the risk profile of these two investors are quite different. Now, obviously, theory says that the equity investors can take more risk by definition in terms of the investment in the company, versus a debt investor, which actually is expected to receive whatever investment he's received over a fixed period of time. And that's a very obviously easy way to put it. Sometimes, and I would have thought, again, all of the other things that they would very much like to know what makes a good company and be comfortable with that. Obviously, on one hand, everyone loves how the top line grows, so a growth company is good to have. Now, converting that growth into profits is obviously everyone would like to see, but then usually is how that profits can be converted into cash flow can be a little bit different in terms of perception, because there are many companies who are great growth stories, but not necessarily generate good profits or cash flow in the short term, which may not be the greatest candidates from a debt investment. Having said that, if you are an equity investor with a focus on total shareholder value, these may be great investments to do, given a longer term horizon. So risk appetite, what the horizon looks like obviously is different, and then definitely the difference between the company's ability to generate cash versus ability to generate profits. Now, there are usually discussions around, dividend outflows, how it is perceived between these two entities. And obviously, I'm here making a very broad generalization. There are different investors in each category. Of course, they are not necessarily can be considered the same and all. But having said that, I would have thought if you can have a good, as I said, good story to tell, people knows where your company is going, you can support it with your delivery or execution, and then be able to show with your results and KPIs exactly, even if you distribute dividends or you pay down your debt, or even if you make your investment, that you still have an acceptable, healthily run company. At least in my humble experience, I saw no reason why one should be choosing over the other, except for obviously some extreme cases where you can very much like to be able to grow your company and make a lot of investment, but you need to be careful about how you formulate that message to the audience. And that usually makes a difference, because it's essentially the same story to tell. It's just about what exactly you would like to tell to the specific audience, and you're not necessarily telling anything different than what you're doing. At the end of the day, you're doing one same thing: good management, good conduct of your business. Now, the third one, obviously, the rating agencies is a bit different. I mean, they are, needless to say, very useful. At least in order to be able to have a benchmark of all the other investments that one need to make, that can be very, very a useful tool to look at. Again, at least in my experience, I found not necessarily very different to, by the same token, let everyone know where the company is going, how you're going to take the company there, what exactly you have done or you have proven that suggests that you're successful in doing so, obviously, and then display it with your results and KPIs, and it should be okay. Now, from time to time, and we discuss about that quite a lot in these forums and outside of these forums as well, sometimes, given the volatility of the space that we operate, and that may not be same across all markets or other geographical places, the perception can be very different, especially from the credit rating agency's perspective. I tend to think the management of the Turkish companies are great, and given their exposure to volatility, they usually think about scenarios or try to get prepared to different scenarios and prepare different playbooks to alternatives that may not be existing or people not be thinking elsewhere. And from time to time, you usually get to a point with the credit agencies where they tend to think even much gloomier than your, let's say, worst nightmare. But as a process, I think that's part of the plan. It depends on how much, from a company's perspective, obviously, how much you can invest in that decision and how much actually have been able to tell your story or your results to that market participant.
Yeah. Thank you, Orhan. That's very, very interesting indeed. And I think it's probably the right time to bring in Okan, perhaps, to just share the investor perspective on this. And I think, in particular, I'd be interested to hear your view on how you make investor decisions at AB and what you find attractive about Turkish corporate Eurobond investing. And then perhaps also just an angle on the rating agencies as well, because I think we always, you know, from a banker's perspective as well, we always wonder, you know, the relative importance of rating agencies in making investment decisions on your side, and where there's arbitrage opportunities, and what do these, and how do these arise? So perhaps over to you, Okan.
Okay, I have 3 questions. The first one is very easy. Why we invest in Turkey? Higher yield. So we get better yields for the risk we are taking. But joking aside, I mean, from the top-down perspective, I think the most important kind of, I would say the positive factor investing in Turkish issuers is that our universe based for the fixed income, it's dominated by mostly commodity names. The biggest issuers are all oil companies. It's Pemex, Petrobras, Gazprom. So the Turkey is a very, very good diversifier for us. So as Turkey being a net energy importer and commodity importer, so when the oil prices fall, obviously our asset class suffers because most of the companies we invest, they are positively correlated for the commodity prices. So I think that's the really one of the most important factors for any global asset manager to invest corporates and issuers. But individually, I mean, when you look at the companies, Orhan mentioned that basically the fixed income investors are mainly, they are much more like risk averse because they are much more focused on downside protection. I mean, the thing we use normally is that we sell a put option on companies' assets, which means that basically our upside is very, very limited by just the coupon we get. So for us, the key thing is how the companies, they prepare themselves for any negative events. So how are they going to manage the financials, the cash flow? I think on that front, the Turkish companies, the managers, the CFOs, their experience cannot be matched with anyone else. I mean, a lot of the management of the companies, they've been in the business since 2000, late 1990s. I mean, I remember in 2001 crisis, the interest rates went up to levels that there was not enough screen on Reuters to match the interest rates. And since then, you look at the global financial crisis, the military coup attempt, the sanctions, or all these geopolitical events. I mean, when you look at the other countries in the world, I don't think any CFO has been through that kind of stress test. So for us, I mean, it really gives the confidence that the management of the Turkish companies, I mean, they are very, very well stress tested. So they are ready for any eventuality, which makes our life very, very easier. Again, I said, I mean, in terms of our investment process, The way we look at it is basically for the fixed income, as we know, again, the difference between equity, the fixed income instruments have a limited time frame. So when Orhun came to us 10 years ago almost, basically for the Anadolu Efes bonds, basically we did our due diligence, not that I used to work for Anadolu Group, but basically at the time we looked at, we did our due diligence, and our motto is basically we underwrite till maturity. So when we invest in a bond, basically we want to stay in the bond, basically get paid back in the maturity. The reason for that is, unlike the equity, where the trading cost is what, 5-10 bips, trading a fixed income instrument, because it's an over-the-counter instrument, can be as much as 1%. So if you try to basically trade an instrument for 5 times a year, basically you lose 5% anyway from the bid-ask and the transaction cost. So for us, it's really important to get the size we want from the initial issuance, and then basically hold as much as possible, and basically get paid at the maturity.
Yeah. That's very helpful. And just given the IR audience here, it'd be interesting to hear from your perspective, what do you think is best practice? What's the gold standard from an IR point of view? What do you want to hear from the Turkish corporate over the course of the year?
The IR, I mean, again, the fixed income, I'm sure the CFOs here that they would agree, we are very low maintenance. Because we are interested in two things. One of them is the capital structure, basically how much the business will have debt versus equity or the cash flow can sustain. And the second thing is basically how they manage the cash flow. So in that front, I mean, these factors, they don't change much, I mean, over the quarter to quarter. So for us, the key thing is basically, rather than basically going through the individual, like the business growth, the margins, or the market share, we are more interested, as I said, during our due diligence process, what's the capital structure policy of the company? Yeah. So how much debt they have. And then the next step is obviously throughout the year, basically we want to see if some of the global factors change, the exchange rate or the commodity, the underlying business factors, the interest rates, how the CFOs will react to that in terms of managing their cash flow. So from that perspective, I mean, what I tell the management of the companies, the less you hear from fixed income investors, the better it is. It means that you are doing a good job. But if fixed income investors, they start to call you every day like 2 times, there must be like real big trouble.
Don't speak to Okan, basically. Yeah, thank you very much for that perspective. And I think maybe Emre Bey, bringing it over to you, I think on the ESG side, ESG is obviously a huge theme globally across equity and fixed income, but I think it's becoming a huge theme in emerging markets, and in Turkey in particular. I think he's been at the forefront of that effort. So interesting to hear from your standpoint what the bank is doing, and how you see the Turkish corporate market evolving on that front.
Okay. Well, thank you very much. Firstly, let me congratulate Turkish Investor Relations Society's 10th anniversary. And I would like to also add that we are looking forward to provide, the capital and financial markets with more offerings and also engage stakeholders involved. Let me start with the materiality concept, because this is very critical. Regarding green financing solutions, or let us call broader sustainable financing solutions, we are building our strategic priorities on material issues related with the stakeholders. We are also trying to understand what's important for our clients, for our stakeholders, employees, etc. So that's very critical. When we are engaging with the investors and the clients, we are trying to also address their needs and also provide solutions accordingly. When we are talking with the investor agencies, rating agencies, and also the indices, actually we improved our performance on transparency reporting and also capacity. Therefore, we've been able to, for example, convert our mortgage portfolio to green mortgage, or our energy portfolio to renewable energy. These are the areas that we are improving ourselves. Also, we are trying to be sometimes an advisor, sometimes a mentor, or most of the time a solution provider for our clients. Let me give some examples about our solutions regarding sustainability. One is related with gender equality. Last year we issued the first gender bond in Turkey. The aim was to promote women entrepreneurs in Turkey, to provide financing to them. It was a 6-year bond, $75 million amount. It was the first gender bond in the emerging markets in the world, so it was a very important initiative. However, we are seeing that supporting women entrepreneurs is not sufficient. We are by far the biggest supporter of women entrepreneurs for more than 15 years in Turkey. We are trying to increase the number of women-owned enterprises in Turkey. However, also supporting women professionals in their career is also very critical. From that perspective, we developed a new loan, which is called Gender Loan. And we signed a loan agreement with one of our clients regarding gender equality. So there are almost 30 criteria in this loan agreement. Let me just name some of them. One is return to work program for employees returning from maternity leaves, or providing gender equality for new hires, or avoiding gender pay gap, which is a problem in Turkey, or avoiding harassment, or providing trainings to overcome unconscious negative bias against women. So there are many criteria like this in the loan agreement, and based on third-party analysis, we are monitoring the performance of the company in terms of those criteria. And if the company performs better, if the performance is increasing, then the pricing of the loan goes down. So we are trying to incentivize the company financially to be better in terms of gender equality, but also we are providing trainings and support non-financially. In the green side, we are also providing new solutions similar to gender bonds. We developed a green bond, which was related to green mortgages. It was a 5-year Turkish lira bond with a size of $150 million equivalent of Turkish lira. The aim is to provide mortgage loans to our customers who are intending to acquire green residences, which are certified by LEED or BREEAM or some other local certifications. The idea is to promote green buildings across the whole country. Actually, that's also one of the first products in the emerging markets. Another example, very critical, green corporate loan. Last year we signed a green corporate loan with an energy company. And again, what we are doing, we are trying to monitor the environmental performance of the company based on several criteria, monitored again by independent parties. Based on the performance, the pricing of the loan is adjusted, upwards or downwards. Similarly, we also launched again last year a green project finance loan. It was the first, again, in Turkey, to a renewable energy company. It's a $260 million project finance loan. There were 4 local banks and 2 international banks in the club. The idea is similar, again, to increase the overall environmental performance of the project. Apart from these gender or green loans or bonds, there are some other products, like, for example, a social bond, which is now being developed. We didn't issue yet. The idea is to support SME companies in cities in Turkey where they were affected the most by the influx of the refugees. Because there are certain cities really under the threat of the refugees, economically or socially. We are trying to finance the SME companies in those cities to provide financing, but also to increase the employment rate in such cities. This will be again, I think, the first such bond in Turkey, even in the emerging markets. Last but not the least, maybe I should mention about the electric and hybrid loans, which is also very important. Looking to the current volumes, of course, the hybrid and electric car levels are very low, but it's growing very fast. According to estimations, by 2040, almost 40% of the new car sales will consist of electric cars or hybrid cars. That's why we tried to be pioneer in this segment and established a new attractive loan for our customers.
Thank you, Emre. That's extremely interesting and encouraging, I would say, as well. Maybe, Okan, to bring you back in to hear from an investor's perspective as well, and I was just thanking Emre as my microphone went off, but Okan, just opening it back up to you. The question for you is, how and why is it important to be ESG friendly these days, and from an investor standpoint, and how do you see that evolving over time, and the relative importance perhaps also versus rating agencies?
Yeah, I mean, okay, ESG has become the recent buzzword, and for a really good reason. I mean, again, for the fixed income investors, the governance, ESG basically, the governance part has always been very important. So we always were very careful, and we always had basically some blacklist, basically the issuers, the industries that we never got involved because of the governance. But then obviously that with the global developments in the focus in the social impact, the environment, basically we've seen a lot of like client-driven interest, basically the capital pool. And also our firm is like very much interested in the development of this area, because we really see is like a going forward that should be the sustainability, the social impact, the good governance is basically good for our business as well. So we are I think one of the first US funds to invest in a green bond in 2014. We've been involved with our colleagues in New York, they're involved with the UN in terms of their sustainability criteria. And we are also involved in development of the KPIs basically for the ESG area. Our firm, from the top management to the shareholders, basically, there's a lot of focus. And for the last 5 years, basically, what we did is that we changed our old investment criteria, and we made one of the 5 factors as important as the financial factors, the ESG factors in our credit analysis. So the ESG factors at the moment is basically, it doesn't matter, it's a green bond or whatever, whichever company or the issuers we basically invest, ESG is part of that, the rating or our internal credit assessment process. So it gives the credit analyst, basically we have 60 credit analysts covering from Chinese real estate companies to the US, basically the really top technology companies. They really like on top of basically the underlying the developments of the issue, both from the governance or also social and the environmental point as well. For us, I mean, again, as I mentioned, I mean, it's not like the financial factors. ESG is as important as the other factors at the moment, and we already involved that process in our general investment basically process. But what we are trying next is basically, as I mentioned, the green bonds have become a buzzword. So, and the green bonds at the moment, whoever wants to see, or there's a capital pool, they are investing in green bonds, we started seeing basically more form than substance. So what we want now is basically we are dealing with the syndicate desk, the bankers. Basically we are working to develop KPI-linked bonds. So what we are trying to do is that on the basis of the certain KPIs that agreed, which goes into terms of the bond issuance, there needs to be some coupon step up if you don't meet those criteria, which would mean that it will really have a real impact in terms of better behavior basically will be an incentive for the companies to improve their basically the environmental social impact. I can give you some examples. I mean, I'm not going to mention the name, but a company from a real estate company from Middle East, they came us with a green bond. And this company basically operates the largest indoor ski slope in the world. And basically for the water, they use desalinated water. So that's like probably the most environmentally unfriendly businesses you can ever have. And then we discussed about, I mean, how do you call it a green bond? They said that, oh, we save a lot from the travel. Because all these people, rather than going to Switzerland, Austria for skiing, they stay in the region and they ski indoors. So obviously we said we passed the deal. But on the other hand, I mean, as Emre Bey mentioned, I mean, if an emerging market bank comes and says that we are going to issue a bond to finance gender equality or women entrepreneurs, for us, I mean, we would be willing to basically accept much lower yields because we know that that would have real kind of social impact. And I forgot about the ratings, so I remember.
But I think you've addressed it effectively through, indirectly, I would say, and it sounds like it's equally important, and it's difficult to really prioritize between the two. But perhaps just a final question that I would like to ask our two CFOs here, just on the ESG theme. What, in practical terms, can a corporate do to make its business as ESG friendly as I mean, I think a bank is quite clear, and I think Emre's covered it, but maybe Gorkem, you want to go from an industrial company's perspective and or from a consumer company's perspective?
So, for ESG, so that's becoming more and more a focus area, especially in the last decade, I should say. So when you look at ESG from different perspectives, what it means. So for a CFO, basically it means cheaper funding with enlarged investor portfolio. So to be very frank, most of the CFOs has to perceive the world like this. But then going to like your other roles in your life, like as a person, what you believe in ESG and for the overall environment, social and better governance practices that might differentiate, then being a business leader in your company or an ExCo member in the company, then it comes to the real position of the company. So I believe that still that's an open discussion that needs to be made. The first thing, whether you're really ESG friendly or focused, or you're trying to be perceived as one. I believe I have the opportunity to work in a company that has dedicated its efforts for so long, for so many decades, to be ESG friendly, even when the times that it was not paying off. Because like we have been working with the largest multilateral banks for so many decades, and to be frank, to be able to pass the environmental audits, to name some of the multilateral banks like IFC and EBRD, especially considering that you're trying to undertake these environmental audits almost 3 decades ago in a heavy industry business that you're operating in, it's a nightmare. But the thing is that how Şişecam has reformed itself and how it managed its operations is even undertaking all the additional costs that it should bear, the company has always tried to do the right thing. So that's the main part with the environmental. So we're an industrial company, so it's a big challenge. And especially if you're working in chemicals business, the business itself is seen as one of the dirtiest industries globally. So you have to be at least a couple of notches much more cautious and much more focused on how you operate your business. And it's not only the operations or it's not only the production team that we're talking about. And the second part is considering the social part. Şişecam, all through the business history it has always tried to develop the areas that it's operating in both economically and socially. So right now we have in place some vocational schools that's helping to create additional jobs that will for sure help us and our industry, but also to help the overall prosperity and welfare of the environment, the surrounding region. And coming to the governance, so it was naturally by the shareholding structure, as ultimately the group is not owned by a family or group of families. The company, without even knowing how to do this, had to come up with improving all the governance practices that it put in place for the last 9 decades, I should say. So even if the governance or better governance practices was not a hot topic like it is for the last 2 decades, that was something that is there always on the table for the continuity and sustainability of the business itself. So I believe for some of the companies and for some of the industries, ESG is not a choice or not an area to be focused or not. It's a mandatory part to be sustainable in your business itself. And I believe the areas that we are operating are one of the most naturally affected ESG friendly or ESG focused areas that we should be. So we try to, and that's an ongoing improvements like operational excellence activities. You have to work on it every day, and the standards that you're trying to reach or overcome is going up and up almost every day. So we will keep up with that.
Thank you. Most interesting. Oren.
Thank you. Maybe adding a little bit on what Görkem is saying. On one hand, sitting under management of a bigger organization, one aspect you need to be quite aware of is culture. And I would very much like to think, and that's how we approach this, is things that you would do under the sustainability, let's say, umbrella, gender diversity, cultural diversity, is usually creates a more motivated, engaged human capital, which actually is the primary driver of your business over the long term, given that that can become a cultural impact. For us, we also believe that unless you can achieve that, it's very difficult to convince your consumers that actually you're a good company and be, let's say, taking steps in those directions. And in there, again, needless to say, from a community perspective, we have always described our mission as not only selling beverages and earning money, but being part of the social life. So from Central Asia to Turkey, from across the world in many places that we are, we always support communities, we support cultural events, societal events. Some of the poorest places that we operate, we try to make sure if it's especially water deficient, we want to make sure that we bring back the water that we use, because we use a lot of water, obviously. That goes back to communities, but to ensure people that the places where we operate we become part of and work for the best of that environment. From a financial point of view, I would like to think again, all these green bonds or KPI-based instruments, for example, are a great way to motivate some of the things that needs to get done, because you can be very romantic about this and say we are very hardcore sustainable. Then there comes a point which is a moment of truth, because there needs to be some investments made, or some decisions needs to be taken that requires resources. So for companies who would like to go that route and take those decisions, it's very useful to ensure that there are motivating, let's say, instruments that those companies can benefit, so that they can channel their resources in such a way that would not be to the detriment of the overall course of the business. And for us, we would like to look at it from end to end, from the package itself that stays on the shelf to our sourcing, even in certain cases, the sourcing that our suppliers do, and their engagement with their own communities in the places that we operate. Because at the end of the day, if you're running a brand, people there do not really care about whoever they're dealing with. They care about, they say, oh, it's FS or Coca-Cola or whatever they're doing business with or have interest with. So that's also a part of the equation. And from a financial perspective, again, would be those instruments would be very useful next to whatever you're saying on the impact of, for example, credit rating. I mean, I think we've done a great job in getting our second investment grade rating, so we're officially investment grade. But going forward, obviously, it seems that there's still more and more we can undertake to ensure that it's not only financial conduct that we can do best, but we should be able to make it part of our own culture that sustainability or everything inside that becomes our cultural DNA.
Thank you, Orhan. I think that's extremely interesting as well. I think I'm conscious of the time. I think we've run out of our slot here. So, and I'm conscious also that we should allow for questions if there are any, perhaps one. But meanwhile, I'll thank my honored guests here and delighted to, and honored to have the opportunity to share the stage with you. We'll take one or two questions if there are any, otherwise we'll thank you.
I think everything
I
was
think it was
clear. Thank you very
perfect.
much.
Thank you very much.
Evet, çok teşekkür ediyoruz. Sayın Tommaso Ponce bizlerle birlikteydi. Thank you very much for your kind contributions. I can take it.